All right, so this is Polestar on the weekly chart, and we have a major level at the $4 level. Also, we have a major level at the $3.30 level. We have weekly sellers at $2.90, and we'll look at that level a bit closer on the daily chart. And we have price now just above $2, and as you can see, this $2 has been serving as support for the time being. So before we continue with the analysis, let's look at this article. It is coming from Yahoo Finance by way of Reuters. Swedish EV maker Polestar trims delivery forecast, halves margin target. So they trimmed its 2023 delivery forecast last week to the lower end of its earlier guidance and halved its gross margin target amid fears of a slowdown in EV demand and global economic uncertainty. So we have high interest rates to cool stubborn inflation, have hampered sentiment as consumers are looking to buy EVs, facing higher borrowing costs that largely offset price cuts by automakers to stimulate demand. So we've seen this year Tesla cut prices on their cars almost 8, 9 times, and we've seen every other EV maker do the same thing, right? To spur demand to offset the higher inflation rates, but hasn't really done much as EVs are a discretionary buy. So Polestar, which operates in 27 markets, said it would now deliver about 60,000 vehicles this year, down from between 60 and 70,000. It had reiterated that forecast just last month after slashing the target in May from the 80,000 target it had estimated earlier. Company said on Wednesday it would double down on cutting costs to boost margins and that it had secured additional term loans from Volvo and Geely totaling 450 million maturing in June of 2023. Now, why did they secure a loan from Volvo and Geely in particular? Well, they have a stake in Polestar, so that's good for them in terms of having that line of credit at their disposal to continue to fund operations. So the CEO had to say the following. He said, with its focus on premium rather than mass market sales, was chasing profitability rather than volumes, and would shy away from cutting cost. Even as pandemic-driven supply chain bottlenecks ease, Polestar has grappled with a delayed production start and growing competition, especially from Chinese players, forcing the company to cut jobs to keep a lid on cost. After the additional loans from Volvo and Geely and efforts to reduce costs, Polestar said it would need external funding of about 1.3 billion in debt and equity until cash flow breaks even in 2025. So that's about 14 months away. Polestar reported cash and cash equivalents of 951 million as of the end of September compared to 1.06 billion 3 months prior. Revenue for the third quarter rose 41% to 613 million, driven primarily by increased prices of its vehicles, but higher expenses led to operating losses swelling 33% to 261 million. All right, so now kind of getting back to the charts. Let's look at that weekly sellers level at 290 on the daily chart. And what you can see is you had a drop in price, several basic candles, and then the drop to $2.20. And on the pullback, that was a great opportunity to go short. Once again, as all your moving averages are still pointing down, indicating that there is still downside risk. And this level was protected again by this weekly support now resistance band. So as we saw on the weekly chart, we saw the $2 level serving as, we're going to say, short-term support. And if I just kind of highlight the bottoms, you could say we have a short-term double bottom, which could be a sign of a bullish reversal. However, based on sentiment, I think prices eventually break the $2 level and go much lower. So if you're in Polestar, and if you believe in the company longer term, you can dollar cost average. If you're looking to get into Polestar, we'll wait for more confirmation before you start getting into the stock. As the chart suggests, there is still more downside risk. Thanks for watching. Subscribe. Please like the video.